Waves, shortening of the thrust, SOT, to the downside, crude oil futures on a daily time frame. Now we've covered the basics of waves, the change of behavior momentum, we're going to add a little more depth. We're all familiar with shortening of the thrust, and here we have it to the downside, where each successive wave makes less progress to the downside. Here, as we can see here, here to here, 1 to 2 to 3. And wave E is our largest down wave, yet progress is halted. So with the largest selling on the chart, we can see we make the least amount of progress. Then F unfolds this wave, which is the largest up wave we've had since this downtrend began. And it's larger than these two previous up waves. Although it doesn't break the swing high or it doesn't break any structure here, we would still consider this a change of behavior. However, it is still smaller than the previous down wave, so there's nothing to do here. This chart would be added to our watch list because, well, the market's unfolded the largest up wave since this downtrend has begun, and we also have shortening of the thrust. So this has to go on our watch list as this reverses around here. Don't forget this is a daily time frame, so we just need to monitor it. It'll only take a minute per day, if that, 30 seconds. So as this comes onto our watch list around this area, the key is to evaluate the preceding down wave. For the market is in a downtrend and we could continue south. I mean, just because we see this change of behavior doesn't mean the market will suddenly just drive off and take off to the upside. You know, markets don't turn on a dime. We need to evaluate the preceding down wave, and in this case, this is wave G. We must pay close attention. And as we noted, we've got shortening in the thrust and obviously the largest up wave since the downtrend has begun. What do we see at G? Well, wave G is the smallest down wave on the chart after the largest up wave on the chart. This action here confirms this change of behavior. Although we've still not broken the previous swing high, this I would like to see, but does not always occur. But it's clear to see there's a shift in sentiment. Shortening of the thrust, largest up wave. Now we have the smallest down wave. Okay. Then wave H, a very important wave. We make a higher high with evidence of good price action. What's important about wave H is that we're having continuation to the upside. But importantly, this is the first time we have broken a previous swing high since this downtrend has begun. So this is significant. Following H, we have this small down wave via J. And this is the smallest wave or down wave or any wave on the chart. So don't forget our comparative analysis. We have evidence of shortening of the thrust at the lows. Then the down waves from E to G to J are decreasing after our change of behavior wave. And we get continuation with H making higher highs, breaking, the first time breaking a previous swing high. And what else can we notice? There is more data available here. The turning point itself. What do I mean by this? Well, G, as we come down from G, look at this price action chop. We're holding here. Last time was up, come down, push up, come down. Here we hold. So from the turning point from G, we can tell that there was a struggle here. The buyers were stopping the sellers coming down once, like they did over here. I mean, look at this bar, bang. Look at this bar, bang. Where is this here? We hold, and this is a daily time frame. We're holding for nearly 2 hours, unable to react. This is significant. Okay, this is an important nuance. And if we can use in our comparative analysis, we have this again the smallest wave on the chart after a significant wave breaking structure into new highs. We don't need to say any more about this. This is, of course, extremely bullish behavior. And the question remains, which I'm sure you're thinking, how do we trade this? Well, let's add structure. What can we note? Well, we have two trend channels here. The major trend channel is here at 1, 1. And we have another channel, a micro channel, 2, 2. And channel 2 reflects the momentum in the market, the stride, the angle of descent. And now if we use or look in depth at 2, we can see that price has honoured the demand line. Here, here, here we reject, and then here. So that's 4 times along with 1, 2 touches. So we know from our studies of structure in session 1 that 6 touches is an excellent or very decent trend channel. We clearly see the buying as we become oversold here. And when we become oversold down here, this is a demand confluence as we have the structure from the demand line from 1 and the structure from the demand line at 2. Look how the market responds to this. Bang! We drive up, producing that change of behavior wave. Isn't it fascinating? And remember we said that this wave F doesn't break structure, as in the swing highs or any obvious horizontal support resistance. Wave F does actually break structure. It breaks the supply line from 2, which of course we know is respected. We just went through touch, 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 and we've managed to drive through. And we also managed to break this area of resistance, and look how we break. Widespread. Okay, there's active buying here. So the response from being oversold down here and breaking this level of structure and the supply line with decent price action is bullish behavior. This is telling us there is demand in this market, and this wave therefore is very important. It's a lot more evident once we add the structure. You know, we gain more data. We see how powerful, we see how important wave F is. What do we note as we react from wave F into wave G? Well, we have a demand confluence down here. We try to hold. We can see we're trying to hold here. We have the flip side with use of the supply line at 2, which is now act as demand, and it's trying to hold. And we have this, which was resistance, resistance, clean break, so that's +3. And we're trying to hold it, so this should act as support, and we can see the market trying to hold. And then at 4 again, look, we hold, we close back above, and we hold and bounce off this line. Flip side reverse use of the channel here is working for crude oil within this channel. And if you can remember from session 1, when a channel has been honoured and respected, more often than not, the reverse use or the flip side use will work and should act as support. And that's an important characteristic that may or may not occur within your chosen instrument. That's down to you to do your homework. We can also gain more data from these attempts to push down at 3 and 4. And that is if we compare to the previous down waves. Look, we're not having these wide spreads, closing week, wide spread, closing week, wide spread, closing week. Look how we come down here, nice and straight. Agreed? Look at this. Chop, chop, These support levels are having an effect. This flip side reverse use is having an effect. It's stopping the market from reaching lower prices. And then from 4, we rally up, we break structure, look at the price action. Then we come back down and we hold at 5. And what is 5? A hidden spring. We can trade this. Very difficult trade to take though. It is a test of support. And if we're nimble and an excellent chart reader, we can make a play, but it is difficult. This is not a high odds trade and therefore not recommended. However, it isn't long until the market does provide safe plays. Question is, why isn't this a safe play? Well, because we've got structure here. We have this resistance here. Don't forget, this is a daily time frame. If we're swing trading, we wouldn't take this trade. If we're coming from an intraday perspective and this prints, yeah, we'd expect higher prices and we'd get this out of it. That's a lovely day. 100, 150 ticks. Anyhow, where are the safe plays? We can add more structure. And now we can see the importance of H. H breaks the supply line from the channel and horizontal resistance. And look at the break. Over 50% of the spread is above our area of structure, closing firm. And as we react via J, what do we see? We have a demand confluence. We have local support and the flip side use of our supply line, which is now support. And we know that the market likes to use the flip side use, as we've seen at 3 and 4. So that's another way that we can use our comparative analysis. How does the market like to react with certain areas of structure? Try to hold, it does hold. We come back down, it holds. So 6 is a place that we can take a trade as we have structure to lean against. Good. As we begin to rally via K, we break resistance. We come back and we have a hidden spring or a hidden test via 7. Now this is a beautiful location for a long play. Hands down the best trade on the chart. We are testing support after the weakest pullback. You know, the market has seen for months. Don't forget, this is a daily time frame. And of course, our story of strength behind us. We have the sellers tiring from E to G to J. We have this change of behavior wave that breaks structure with clean price action. We noted the turning point here is not as evident. We're not coming down with alacrity like we did here and here and here. We hold, we stall for 2 weeks. Then we come back down and we try to hold. We're holding here, unable to react. Then we push up, making a higher high, breaking structure. And then we have a reaction to a demand confluence, with this, which is the weakest reaction on the chart, the weakest wave, the smallest wave of any buying or selling on the chart. Then we push up, then we get this lovely hidden test, hidden spring. We have to buy 7. This is a no-brainer trade. Okay, and if we take this, look, we break local resistance here, good buying, good buying. Come down, we push back up, that's $8,000 per contract. This is how we can use waves to our advantage. Extremely powerful for higher time frames, especially swing trading. The poignant feature to this chart I'm trying to illustrate is that the market does not always produce a clear change of behavior wave that has momentum, breaking swing highs, etc. Waves F and H here, they're not the largest waves. You know, the down waves are still larger. Agreed? However, they are they're making higher highs, breaking structure, so that we're achieving that's something to note. I'm trying to give a very complex study here. It's intentional. It won't get much harder than this. I believe there is little to learn if I were to give perfect, clean textbook studies. We need to apply our understanding of the forces at work, being that of supply and demand, and be able to read the shift in force. I mean, here the selling waves decrease in time from E to G to H, and shortening of the thrust from A to E. And then there is a major tell between each segment of the waves. We are making upside progress from E to J, and as we do so, the selling waves are decreasing, they're getting smaller. We interpret this so as we drive higher, there is less selling pressure. So obviously this would equate to higher prices. We must apply this kind of thinking, this logic at all times. And when we get a clear read in waves, we look to structure to lean against, if possible, and then we drill down to bar by bar format for a confirmation bar, our trigger bar. Good. I see no questions. On to the next study.